Hey everyone, this is stock chart of the day for Tuesday, September 26th. 26th of September is always a special day for me. It's going to be even more special today. Today will be the last day that our YouTube channel will be called Addicted to Profits. At some point, I'm going to set up the stock chart of the day site, which will just be the Addicted to Profits site and moved over there. So I've decided to do this because I just think the pay per subscription model is kind of dead. And I've talked about how I do consulting with companies. I like the idea of doing these daily short videos. So I can focus on research and not just, the problem with writing is I write monthly for something called Financial Intelligence Report. And writing is very time consuming and cumbersome. And I rather find good companies to market for, consult for, invest with, and then also do these kind of macro videos. And when my book is published, I may do a newsletter through a couple of websites using the book as a promotional tool. So, but like those will be like through larger companies and they'll do all the back end stuff. And look, I'm just not good at that stuff too. I don't like it too. I don't like doing back end stuff. I don't like dealing with just like, refunds and cancellations and it's just a pain in the butt. I just like pure research. So that's a nice thing. Usually when we start, excuse me, our Patreon, you'll see that Patreon basically does everything. So I'll show you why today is a special day for me for two reasons. Give me a second. I want to get one more thing. So what we're gonna I'm gonna get this open too. So yeah, here we go. Yes, I'm gonna show you why this again. Like this is a special day for me. So show you this. Okay, so we'll show you why September 26th is a special day for me, and like this is again the last full day that Addicted Profits is going to be the YouTube channel. I've already changed it to @stock or @SCOTDAY, stock chart of the day, and then day is the address on YouTube. And the thing about this is I wanted just like Scott D, but the issue was that was taken. So SCOTDAY. SCOTDAY is kind of easy to remember too, right? So you can see this. You go, why is INXS up here? This room, they were my favorite band. It's kind of funny because I have hair like Michael Hutchins, But and yeah, you can see this warehouse here. I was at this concert, which I think they did have one more concert in Pennsylvania after this, but I guess technically this was their last concert of the tour, which technically would have been one of the last concerts they ever did. And the weird thing about this is two things. September 26th, I was there. And then September 27th, their last concert in Pennsylvania was my birthday. And like I said, this is like my favorite band of all time. Kind of weird that like the last concert with Michael Hutchins would be on my birthday, right? So it was a great concert. Actually, it's on YouTube if you ever want to listen to it, if you are an INXS fan. Someone had a camera. This is kind of like pre-cell phone days, but someone brought a camera there. And I remember he had one really funny line where, because you can see they did 2 nights in a row at the warehouse. So he had a really funny line, Michael Hutchins, where he said, "Oh, great crowd." And then he paused and said, "Well, maybe the same crowd, just better mood." Kind of admitting that the band wasn't as popular as they were. This was a small venue, only a few thousand people. I was like in the second or third row. It was a pretty wild concert too. I actually remember they brought some strippers on when they ended off with a song called Suicide Blonde. And these 2 people, I think, got engaged there. It was like a wild, that was a fun night. And actually, so I was actually the day before my 20th birthday. So my last day as a teenager was fun. So then also on September 26th, my newsletter was called Addicted to Profits. It was named after the Addicted to Love song by Robert Palmer. He died September 26th, 20 years ago today. He died. So again, kind of weird that I saw INXS September 26th. Robert Palmer is probably my second favorite artist, and he died September 26th. So, that September 26th day might be considered a little cursed because I saw them, and Michael Hutchins died about 2 months later, and then Robert Palmer died on September 26th. So, but anyhow, and of course, Robert Palmer actually lived in the Bahamas from 1980, so 1974, I think, to 88 or 89. Actually, Addicted to Love was recorded at a famous studio called Compass Point in the Bahamas. It's really interesting. There's stuff on Compass Point. It was one of the biggest this little studio in the Bahamas is one of the biggest music studios in the world. AC/DC also made Back in Black there. So that's enough. We're gonna have more memory lane actually in my first day as we launch stock chart of the day in the Patreon. I'm gonna just show you a bit about my background, my past. I got old articles, how I got my securities license very young, my first book. It's just, I might as well reminisce a bit because, doing Addicted to Profits in one form or another. I took a year off in 05, 06 before I moved to the Bahamas, and I did call it the Scarica letter for a little bit, but it's basically been that since 1998. Which is funny because again, moving to the Bahamas and Robert Palmer living in the Bahamas in 98, I didn't have much of an inkling that I would be moving to the Bahamas. So 98 to 25 years is a pretty good run, but things change, and I think it's kind of time for a little bit of a new start here. And people seem to really be liking stock chart of the day. We're getting a few hundred views on each video. Kind of the long-term people here, and I'm really going to build it up. I'm going to start going on other financial podcasts, do a little more to promote the site. And the thing about YouTube is they have algorithms. I just wanted the content there. I still just want the content there. I really don't think I'm really going to build it up. I'm patient with this for 6 or 12 months since I started. I really started in June. So probably next year, really. But, I just want to slowly do it, slowly build the content. Then people can also look. They'll see 2 months worth of stock chart of the days right now, and they'll see 3 or 4 months, in another 2 months' time. And then they can decide, is it worth the $7 a day, 23 cents a day? So $7 a month, 23 cents a day as well. So, and Addicted to Profits is still kind of exists. That's really kind of my consulting business too. And also the, we're kind of doing the, the stock deals. If you're interested in private placements, our option trades. I'm actually going to talk about an option trade to the members, paying members later today. So, today our stock chart of the day, now that I kind of got that out of the way, I hope you didn't mind that, but I like to have a little fun with this too. I just don't want it all to be serious. I don't want to be too serious. I like to talk about sports and the whatnot. So, so we have to go back to interest rates. We've talked about housing affordability and all that over the weekend in our kind of extended stock chart of the day, the weekend version. So this is the TLT, which is the 20-year bond chart. And you can see it broke through the low of last year. And remember, the stock market, the S&P was 800 points lower, almost 20% lower than it is now. So something's got to give. And as I showed, 7 stocks in the S&P are up on average 52% year to date, and the other 493 are only up 5%. So that's really carried the market. So again, if we go and look at, let's get a really long-term chart of this, going back 20 years, you can see that this is basically now the lowest level since 2014 in the TLT. And it's kind of rolled over here. And then you can see that looks like a class, especially with this gap here that happened in early 2020 during COVID. That looks like this is a classic long-term secular bear market where we had a failing rally that summer, a decline, and then another rally in 2021. And, that kind of sets up the downtrend, and then this decline. And then this is another failing rally. It looks to me like we're going to go back to this 80 of 2013. That resistance. And if we go look at, so that just means bonds are rolling over, rates are continue to head higher. And I think a lot of this inversion in the yield curve is not just because we're going to go into a recession. I do think we are going to go into a recession. I think a lot of this inversion in the yield curve is basically because people were essentially buying bonds at 3.5%, 4%, thinking, oh, for all these years here, really you couldn't get 3% on a 10-year bond, other than a few months in 2018. You're mostly were in the 2 to 3% range, and of course it went all the way to zero. So people, when it went to 3.5%, 4%, were like, wow, this is the highest yield in years. So let's even go back even further. Let's go back to the 1990s. We'll go back 30 years. And you'll see you draw a line here. This is the highest yield since 2006, 2007. and there was a lot less debt in the system. So pre-financial crisis, less debt in the system. So pre-financial crisis. So, you know, and again, with mortgages being where they are, house prices where they are, people are paying a hell of a lot more. Probably 10-year mortgage is going to go to 8%. Like here in the Bahamas, I'll show short-term rates in a second. We go prime +3 for a US dollar mortgage. And remember, here our interest rates are higher anyhow. Like a 10-year bond in the Bahamas right now is like 9%. And even during the depths of interest rates down here in 2019, I think it only got down to 6 or 7%. So longer term mortgages for Bahamians would be based off that. But so they would be paying, you know, like probably 10% for the longest time. Like, so anyhow, when I got my mortgage here, it was between 6 and 7% because prime was around 3.5. Well, now prime is 8. A mortgage here would be 11% for a foreigner. Most of the foreigners here just, you know, buy land. Some land here, especially on these outer islands, are still pretty cheap. They buy land and build, or the rich one, you know, rich guys just pay cash. You know, and there's a lot of obviously rich people who get places offshore on the islands. So anyhow, you can see that is the highest level here since we'll take the log scale off. Yeah, I think actually taking log scale off makes you see it better. That's the highest level in interest rates since basically 2006. And if we go look at the short-term rates, yeah, you can see it's the highest since 2000, since like the dot-com bubble burst. So, you know, we're seeing these multi-decade highs, you know, 15, 16-year highs on the on the long end, 20-year highs, 23-year highs on the short end. So just shows you, you know, like, let's put it this way. Robert Palmer was still alive the last time we saw rates like this, right? So anyhow, so and by the way, Robert Palmer, I did see him in concert, by the way, too, in 1999. Sorry, I digress. So anyway, you can see, you know, what these rates are doing. And, you know, again, what mortgage is doing. I think what's happening now, one reason these rates are going higher as well, is that basically the realization that the Fed is going to stay higher for longer has come in. I think a lot of these little rallies that go on in the bonds like this year are always like, oh, the Fed's going to pivot. Oh, the Fed's going to stop. And then now the Fed's fund futures, you know, going out to next summer have barely any, you know, rate hikes, you know, you know, priced in, or so rate cuts priced in. So I think it's a combination of people were looking for desperate for yield. They thought 4% was good. Now they're getting killed because remember, when you buy these bonds at 4%, like let's say you bought it here on this little bounce, 105, you know, well, now we'll get a shorter term chart to show it better. Yeah, let's say you would have said, oh, okay, I think bonds are bottom, even 100, you're down 10% already. So it's like you're down 10% in price. You're only getting the 4%. So basically it's going to take 2 years of yield for you to get your capital back. So that's the danger in bonds. And I know a lot of people who are deflationists who thought bonds were going to go up forever. And I'm not going to name names because we all make mistakes. And that they wanted it. They said, oh, one reason you can buy the bond is because for capital gains, right? Like, you know, like when they thought the bond, say at 3% bottom, you know, you can see it was great capital gains from 2019 to 2020. The bond went from 100 to 160. So who cared? You didn't even care that you were only getting an implied yield of like 2% or 1% because you made 60% on the bond. But of course, you know, the problem bonds in that price too is that when bonds are basically yielding zero, where's the upside in the price of the bond, right? Because bond prices go up when yields go down. So stock chart of the day for today, we talked a little bit in memory lane. Today is the last day that the YouTube channel will be called Addicted to Profits. It will be renamed Stock Chart of the Day on my birthday. And I don't know if I'm going to launch the Patreon. I think I will on my birthday. I got to play around with it today. If it doesn't launch today, I'll just launch it on Monday. I always kind of like to start things on Mondays anyhow. And, you know, and Monday's around the first of the month. So that might make more sense. So I think actually probably what I'm going to do. And then I'll have everything working properly. And I've just been so busy with so many things, including these charts and talking with companies and blah, 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 and setting up that Raiders website on the side. Yeah, I haven't really done much with the Patreon page, and I want to upload a bunch of videos to Patreon. So probably we'll launch it on Monday. I think that makes more sense. I think Monday is the 2nd of the month. So yeah, basically launching, and actually I might even do it on our extended stock chart of the day next Sunday. Right. So I think that's going to make more sense. Anyhow, so there's the stock chart of the day for today. Rates near multi-decade highs, bond prices near multi-decade lows. And I think it's just this realization the Fed is going to stay, tighter for longer. And, people kind of throwing in the towel on all this pivot talk and whatever. And we've talked about oil prices and resource prices bouncing a bit here. We've talked about that in the past. That also is going to put more upward pressure on inflation. And the year-over-year comparisons for inflation this spring and summer were easy. That was when oil was over 100. All these prices spiked on the Ukraine invasion, in 2021. And then the year-over-year comparison in 2022. So the year-over-year comparison in 2023 was easy. Well, now we're getting to where the year-over-year comparisons late last year, early 2023 are not as advantageous because they're going to be year-over-year comparison to low natural gas prices, low oil prices, etc. So that also could put upward pressure on interest rates. And obviously, the only thing I could really see kind of ending these higher rates is if we get some kind of big smash in asset markets. Housing prices fall a lot, stocks fall a lot, and then that probably will be short-term disinflationary, and that could give the Fed some wiggle room to cut. Anyhow, I hope you enjoyed this. I hope you enjoyed the little music memory lane. What bands I like now, what musicians I like. So there you go. So everybody take care and have fun. Have a great day. And no concerts today on the 26th for me, unfortunately. My wild fun day will be picking up some food at the dock. But the food is oysters, which is like my favorite thing. We can't really find them here in the island, so I have a great service that ships them in. I don't know how they do it. They come in frozen, and when they de-thaw, they taste like totally fresh. I don't know how they do it. Take care.